Alright everyone, Cowboy Trades here, welcome back to the channel for another update on Bitcoin. This is just going to be a super quick update, a follow-up from our last video. We made a 20-minute video 4 days ago. Not too much has changed. There are a few technicals I want to update you on. I think something big is going to happen in the next 24 hours or so. So let's dive right into this. Now, like I said, where we left you off 4 days ago, we're pretty much at the same price, but what we have done is we did what we talked about in the previous video. We've basically come up to this liquid range where there's tons of liquidity, and this also correlates to Bitcoin's previous lows, 17,600. You can see we've been chopping around in new lows. We never retested the lows. We broke up today, and we pretty much more or less touched it by about $100 off. We kind of started topping out around about 17,450, and as we know, the lows were around about 17,550 back in June. So it looks like we've pretty much retested this previous support and flipped it as resistance. So looking at this, it does look like we're getting ready to move down very, very soon. Now, in accordance with this as well, if we do look at this chart once again, touch the previous lows and we're starting to turn back down, you can see the squeeze momentum indicator. We are in a downtrend right now. We are in green territory, which does mean that obviously after this uptrend that we're going to have a lot of momentum ready to push back down to the downside. And if we do look in general, you can see this volume cluster is smaller than this one, which 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 is smaller than this one. So over time, when we're looking at the squeeze momentum indicator, these bullish momentum swings to the upside, they're most of the time just a reversion to the mean. And well, I say most of the time, they're pretty much always a reversion to the mean, and with that we normally roll back over at a lower valuation than the previous set of squeeze momentum indicators. Now, if we're looking at the money flow index, you can see if we draw like a line of best fit, you can see this downtrend has actually been in play for a very long time. But if we're drawing, a line from touch point, touch point, touch point, you can see we have once again run into this downtrend over on the money flow index. We're currently sitting around about 71.5, which is obviously very, very close to 80, which is very, very overextended. So we are overextended, we're above the heart line, and the stochastic RSI as well is in agreement with this. The stochastic has just crossed over 80, and when was the last time that we crossed over 80? It was back here round about the end of October, and you can see this cross, dead cat bounce back up, liquidity grab, and pull back down was this overextension over on the stochastic RSI and the MFI over here. Right now, the MFI is even more overextended than it was when we were at 21,300, and the MFI is also more overextended than when we were at 21,300, and obviously now we're trading at 16,900, so it's not looking good. Now, outside of the Bitcoin charts, you can also see government bonds. The 2-year yields looks like it's in a bullish pennant and wants to break to the upside. The 10-year started to pull back down a little bit, but as we always talk about on the channel, the 2-year will pivot before the 10-year. So when we are looking at the 10-2, if you want to learn more about the fundamentals of this, I'm not going to explain them in this video. I do want this to be quick. If you want to learn the fundamentals about the 10-2, check out my educational series. I have this video called Understanding Market Conditions. If you want to learn the fundamentals of the 10-2, if you don't, that's fine. In terms of the technicals, the lower the 10-2 goes, the higher the 2-year yield is outperforming the 10-year yield, and that normally means we've got lower to push to the downside. It's an ingenious way of looking at financial conditions. Let's head over to the DXY. You can see right now, the DXY, I would be lying if I said this wasn't a little bit shaky. We've definitely had a brutal run back down to the downside. I do also find us like coming down to an area where we do have a lot of support. So we originally talked about this bump and run pattern, and it looks like we've started the run to the downside. We can be saved if we do zoom in right here. You can see this previous resistance could be potentially getting flipped to support right now. I mean, we came down to around about 104.1 and we're pushing up to about 105.3. Obviously, no celebration can be made on the DXY while we're making lower lows and lower highs. And when I do pair this chart, I would also like to highlight DXY tops and SPX bottoms are not too far apart. So you can see over here, DXY topped out in the 2008-2009 financial crisis, and as soon as it started rolling back down, the stock market conditions really started to ease. I would also like to highlight You had a massive run up over on the DXY back in this period in time, coming up from 70 all the way up to 89. And what you can see is we had a relatively brutal drawdown. We broke down about 12.2%. I'm sure people back here, I can't speak for them myself because I wasn't trading in 2008, but I could imagine that people were getting extremely bearish around about these territories before we snapped back up, made a final high, and broke down to the downside. This is the type of situation that I currently believe that we are in for the DXY, and mainly because the S&P 500, I mean, we have not had a relatively sizable drawdown from the all-time high and compared to previous financial crises. I mean, we're only down 27%. It's really not the end of the world. And when we do look at the 2008 SPX fractal, this is beautifully, not day to day, but week to week, month over month, beautifully called, you know, peaks and troughs in this market. And right now it is really telling the price action that you need to start running back down to the downside for this fractal to obviously still be valid. And I still do believe, I mean, look at this thing has beautifully tracked price action. We haven't moved this chart whatsoever in maybe 6, 7, 8 months. If you've been watching the channel, you can obviously go back and check that. So let's check out some on-chain metrics. Like I said, in terms of price action, nothing's changed. We're the same price as we were 5 days ago. I care about my time. I care about your time. I'm not going to waste any time. If you watch my previous video over on Bitcoin, bull market, bull trap, we dived into tons of charts. And as with the same price, all of this analysis is still in effect. Just wanted to update you that a lot of these indicators, you know, the liquidity grabs, the oscillators, they're all starting to top out in my opinion. So let's move on to the on-chain metrics. Let's update the Bitcoin rainbow price chart indicator. I'm only joking. Let's look at something useful. Let's look at the addresses with more than one Bitcoin, aka the retail wallets. What are they doing right now? Since I've left about 4 days ago, they are accumulating. Who are they buying from? Well, as we know, there's two sides to every coin in the economy. There has to be a buyer for every seller, a seller for every buyer. Who is selling to these retail traders right now? It is the addresses with more than 1,000 Bitcoin. They have started offloading more since the last video, and as we've talked about, they beautifully have navigated this market. You can see they were basically completely selling at 46,500, and you know, when I make these update videos and let you know very quickly that they are still selling, they're really only selling minute amounts down at these levels, maybe to cause the capitulation, maybe to cause fear in the markets, but for whatever reason they've beautifully navigated the top, and they were on the sidelines when Bitcoin was at 42,900. They've basically been on the sidelines since then, and they've been selling a little bit here and there, but these are the people that I do like to follow. And hence, when we combine these two charts together, when we look at retail wallets and we look at institutional wallets, we get the Bitcoin ratio of retail to institutional addresses. Let's zoom in on this. This is pushing to the upside. Let me get a nice zoom. So since I left around December 1st, you can see tiny bit of continuation, meaning that institutional addresses are currently not as interested in accumulating Bitcoin as retail traders. What has that previously told us about the price action? Well, looking at how retail navigates these markets, they didn't want to buy at 8K, they didn't want to buy at 9K, they didn't want to buy at 10K, they didn't want to buy at 12K. When did they want to buy? They started drastically accumulating at 40,000 when the price was basically already more or less topped out. I mean, obviously we came up, made a higher high, double topped, but at 40,000, retail was like, okay, now is the time to start drastically accumulating. And institutions were like, yeah, 46,500, I'm selling, goodbye. So like I said, I don't want to waste any of your time. Not a lot of the analysis has changed since the last video. So this is the final chart that I do want to wrap up on. And we already basically talked about the concept of this in the first chart over here, where we retested Bitcoin's previous range lows at 17,600. This is a liquidity grab, my friends. If we look at the volume profiles, there was a decent amount of liquidity in this range. There is no decent liquidity beneath the floorboards. If you start falling beneath 17,500, you're going to rocket to the downside. What price are we at right now? We're beneath 17,500. So we pushed up to this volume profile, grabbed a tiny bit of liquidity, and now with the stock market heading down, DXY rebounding, government bonds still looking very strong, retail buying, institutions selling. Just wanted to give you a quick update. It's not looking good. Where's my price target? The same as the previous video. We do not have barely any volume profiles built down at these ranges. I mean, if we do break down into new lows, There could be a tiny bit of support at 15k. We could lollygag around here for a week or so. But in my opinion, I think it's more or less smooth sailing until we do get down to around about 14,000, which is my next price target in the immediate short term for Bitcoin. I'm currently not shorting Bitcoin because Bitcoin is not really in a position of strength, in my opinion. I mean, it technically is, but it hasn't had like an over exuberant rally. It is really, really weak at this moment in time. I am currently in a trade though. I am in a KDA trade. If you do want to learn more about this, I talked about this in my last video. And if you're a veteran of the channel, hopefully you watch this video, Cadena's next move. I set the entry to the trade about 5 days ago over on here. So this trade has hit and we are starting to come to the downside. It is currently in about 18% profit on our 3x leverage trades. So like I said, my friends, not too much to update today. I won't waste any more of your time. So that's all I've got for you for this video. If you do enjoy these content, as always, my friends, hit that like button, hit that comment button, turn notifications on, and send the channel to your friends. YouTube loves when you engage in the videos. It pushes it out to a new audience. So you definitely be helping me out if you do that. And also, if you want to follow me over on Twitter at 618_cowboy, when I am away from the markets, I do post some charts over here, some technicals, and some updates. So all I've got for you today, as always, Cowboy out. Peace.